Hey guys, DJ here from PTA. Want to go over some stocks today. Today I didn't place any trades, wasn't on the desk. Really was focused on trying to get different things done here. Me and my significant other is actually moving soon, so we're trying to get everything placed and done for that. And that kind of took up most of my day. Looking at this stock, this is the overall market as SPY. Today was a good day. Got us a nice little rally that happened into the for the full day. So I know that people were excited to kind of see that type of multi-day run and SPY. Again, me personally, I think it's going to probably shake out somewhere here, maybe in the 420s, 426, somewhere around there, and then I should see a flush. I'm really curious of looking at it coming back down to the 350s. It get back down to the 350s, then that is probably when I would start adding into looking for a bounce, because that'll be a nice size bounce. Last time when it bounced, you had a nice move up to the upside of at least 46 points. So right now you're at like 34, so 46, another 12 points. That's why I said somewhere around that 26 area, somewhere around there, 26 area, and then fall back down. And I'm just saying this just based off of previous moves. I don't see, when I look at stocks and I look at moves, I look at how it bounced, how it's doing this and how it's doing that, because that kind of give you an idea of the past history. If it bounced 46 points, it may do that again. Anything shorter of that just shows you that it's getting weaker and weaker. It's same thing on the other side. When you get a downtrend, look at how far it goes down. And that kind of give you, when it starts swinging less points on each swing down, it lets you know that they're, shorts are getting exhausted over time, and then you can look for a nice bounce. So outside of that, let's go over some stocks. So these stocks are all ones that were named in our Discord. So if you're not part of our Discord, you're just simply missing out. It's not something that we just kind of put together strategies and different things like that. These things are very particular, sector driven, volume driven. So we look for certain patterns and the reason why we play them. But all four of these stocks I'm going to go over are things that we in the staff had put out there to our members, and then we later added it to the Discord at a later time. So still great opportunities, but people who know first thing in the morning that have subscribed to us, those individuals get time to plan. They get to plan out their position as far as points of interest and support, resistance, and different things of that sort. It's kind of difficult to do that in real time, but some guys do it. I prefer to be prepared and know exactly where I want to get in at, what's the key areas, what I should look for, where should I stay away from, so on and so forth. So all these had decent volume today, but let's go over SIGA. That one there, monkeypox play. We have been looking at it all week, and again, it's just making sure you on the right side of the trade. Looking into the hour, again, guys, I like to see a rip and then a pullback. We got that pullback on the 30. So this was our zone from here to here. What I typically do is look for pullbacks when I see higher highs and higher lows. So right here is where I start to see the higher highs and higher lows. So ultimately, I'm looking at it like this. So when you're looking at the stock like this, what happens is that you see what the actual pullback is, also the violation. So when you get that violation right there, you can kind of get an idea which way that stock is going to go. Once it's violated, then you want it to hold. Once it holds, then you can join a trend, because now it's telling you I'm going higher. It's not a speculation. You can actually build that off a price action. So going down to the 1 minute, you can kind of look at this and see structurally, this is where it got violated. So when it actually pulled up, being patient, you probably would have got in somewhere right here, you know, right there on that candle, risking about 30 cents. I mean, you can even risk here. And the reason I say you can risk there at 20 cents is because about right here is where the stock came back and respected. It came back and respected this line. So let me actually get a price for you, because that'll give you a better idea of that area. So about right there, you see all the touches. When it touch, pull back, touch, suck back up. So that 1080 area, 1080, I say 1080 just because it's a whole area. The 1080 area is about where, you know, this stock was, you know, making its move. So about that area is where, you know, it broke out from before, return to confirm, and now it's breaking out from there again. So you figure if you got in, you know, with a 20 cent risk, you know, you're looking at right now, it didn't violate to about right here. You know, you looking at easily a $3 gain. 20 cent risk, $3 gain. So we'll just say $3. You're looking at 15 to 1. You can't beat that. That's good R&R. That's what it really boils down to. Get that risk really low. Get in there, load up, and let her rip. As long as it doesn't violate your pattern, violate your trend, pretty much let it go. So ultimately, that's the case when it comes to these different areas of interest. So I'm always looking for that area. I'm looking for the violation. I'm looking for the stock to do what it's going to do and allow it to kind of manifest and form the way that you want it to. This was a solid trade inside and out. So I know this was a big winner for a lot of our guys. Again, majority of the staff was already taking a look at this coming into the day, because we had the price action from the morning. So like I said, this was just a great trade all the way around for whoever took care of it. And I believe some of our senior traders actually threw out some price points as entries and different things of that sort when they were looking at this as a trade. So the next trade I want to go over is another pharmaceutical company, AVDL. Just came off of a major bounce off the 105. Now this one here is one of those ones that you sort of just, you wanted to wait for the pullback and then wait for the violation and kind of take it there. The best violation for it was in pre-market, honestly. But the thing is that it didn't really have a lot of volume that I like to see in that. So I like I said, most cases I like to let it like ride out. So this is one of the another pattern that I do. And this is like, if you look at it, it looks as if it's a inverted head and shoulders, or a head and shoulders, I should say. So this would be your head, and then these was your shoulders. So the thing is that when I see something like that, I'm thinking to myself, okay, the stock wants to go higher. So honestly, I probably would have got in about here, risking to here, or if I just want an infinite risk, I would have risked back to the head and then take it from there. Now, what kind of risk is that? Honestly, it's not a lot when you look at it objectively. So once it confirmed, that risk from here to here was 20 cents, literally. So you're talking about a 20 cent risk, and it didn't violate to about right there. So you looking at an 80 cent move. So you're talking about 4 to 1. Not bad when you let it do what it's gonna do. So, and then depending on your size and all that, you can really load into the stock heavily to see, what it's going to do, how it's going to play out, how it's going to do what it's going to do. And then you look at the market structure. Like literally this stock, if you had got in at that price, so let me kind of draw that out for you so you can understand what I'm saying. At that price, we said we would have got in, let's say right here. So 168 was the price. We would have been looking at a 20-cent risk from the daily low. Yep, 20 cent. We'll call it 20 cent. And from there, when you got in, to put it in perspective, you take it out to a higher time frame. So when it started to go up, higher lows, higher lows, higher lows, maybe when it violated here, you would have took some off. Right there. But, me being a trader, I always pull back out to the higher time frames. So I'm looking to see what it's going to do. Well, it's still making higher lows. So it's not until I get to here at 247 that I'm actually looking at it and saying, hey, this thing is doing something different on a higher time frame than it did before. So if I look at it, go back down to the 1 minute to get retrospective, just kind of look at the stock, you can see that this is the area that it bounced and then it kind of broke down from. That's why I kind of look at the 15-minute more than anything. It's one of the secrets. You drawing out to the higher time frames to kind of get a sense of the behavior of the stock so that you know exactly where you want to go or where the stock is going to do so you can stay in the trade as long as possible. So you're talking about literally, from 168 to 246. That's a nice move. That is a 78-cent move with a 20-cent risk. So 78 cent, 20 cent, that's a almost a 4-to-1 move, give or take. You might have took some shares off here or whatever, or saw something on the tape, whatever. But the whole key idea is to make sure that you paying attention to the price action, paying attention to the chart, watching it form, do all those different things, and ultimately you'll get that play that you're looking for. Next stock I want to go over. Let's go back to the daily. It's Plug. Now, reason why I want to go over Plug is Plug was a nice move. It's been moving. It came off of its low of 1270, and it's been moving. Now it's kind of like been moving on, just kind of moving sideways. Nothing really crazy. No little price action that really made me say, oh yeah, I got to get into this. Because at the end of the day, I just didn't see it. So it just was doing small stuff. 28 million, this here, that there. Nothing really significant to say, hey, yeah, I'm about to go. Now this is where it got interesting for those who play it from the higher time frames. You see this clear downtrend, right? So because of that, I'm looking at it because now I'm interested. Because soon as it violated it, that's why I'm looking at playing. So this would have been a 2-day move in particular. So looking at the 5-minute, you can look at it and say, okay, I pulled down, I just broke market structure. I just created a low. I broke the market structure here, and then I broke it here, and then I broke it here, and now I'm going higher. I came back, I retested. So this would have been a great entry here off of the 1 minute, simply because you're going straight into the area and retest and bounced off of it. So not only am I bouncing off of a market structure from off of a higher time frame, I'm doing the same thing in the lower time frame as well. So everything is lining up. And as you can see, it continued to make other market structure breaks. Once it broke, then, that's when you add, take off, so on and so forth. And it continued on up to 1936. So legitimately, you could have probably got in somewhere around here off of the market structure break at 1647 and rolled it and still be in the trade today. So it's one of those things to make sure you formulate the pattern from the higher time frames, and if you see those items that are matching up on both the higher and lower time frames, and you can zero it in, and you see the stock behaving the same way it did on the higher time frame but on the lower time frame, that's confluence. And in that allows you to make a confident trade, knowing, hey man, it's doing this on this frame, it's doing that on this frame. That's why multi-frame analysis is so critical, because looking at that stock from all those different points of view, traders are looking at it the same way. So everything lines up. So going into the day, you had this nice little pullback, but it wasn't clean. So a lot of traders probably waited, and then once it broke market structure, and what I mean by that is you want to see the market structure break on like a 5-minute, where it's making this lower lows, higher lows, going into the structure, and then you had this big sell-off, ramp up, pull back, and then it took off again. That's a great indication that the stock is trying to go higher when it rips through that previous area before. And mentally, you should be able to see that and say, okay, let me add to that position, or let me get in now, because that's going to be a good area. So honestly, you look at this, might have been a bit of a risk, 30 cents. So that 30-cent risk bounced, pulled back, went sideways for a while, and then continued on. So it's one of those things that you got to kind of be patient with that trade, because it may not just play out the way that you think right off the bat when it comes to that trade. So the next stock I want to go over today is this play on Cnce. So this is one that I lost on actually the other day. So let me break this down to a daily. Cnce actually went pretty nice today. Nice price action. Gave a lot back though. I don't really like to see that. So let's go into the hour. We had a massive pullback here pre-market. So let's look at the actual price action, see if it was actually some validity to that pullback, or was it scattered? It was a little bit scattered. So looking at this structurally, this was interesting. Didn't have a lot of volume, so I probably would have played it here. Make sure we got our extension. And then this is probably what tripped a lot of people up, was this right here. I always look for the 5-minute pullback. Looking at this, we had pullback, pullback, pullback. It never did this. It was right here. So about here is where everybody probably got in at, right there. So let's look down into the 1 minute. Yep. As soon as it broke, probably would have got in somewhere right here with a wrist to here. And see, it's a great indication because it was slowing up here as the volume started to dry up. It's about a 6 cents risk. So even if you risk to the previous swing low, that was 10 cents, and it went for 90 cents. So 10 cents, that's 9-to-1. You can't beat that. That's good trading. That's patient trading, waiting for the move to actually set up. So something to think about when you're placing trades. Like, is the move setting up, or are you just trying to join because you don't want to miss out, or some type of FOMO or some type of action like that is happening? You definitely want to always look at those areas and before you jump in and jump into the trade. And this is a really good trade. This was a really simple one. And let me kind of draw it out because I'm looking at the swing lows as part of it. So, you had an up move, pull back, that created a swing low there, one right there. And then you had a nice little, sideways price action, nice push. And then it actually started to fade here. Now, this became an area of interest. And then when it stepped up here, so look at this as a swing low, another swing low, You know, you had a double test and then a rip. It did very well. I think that was a really good trade. So it's just manifesting and kind of just paying attention to where it's actually doing where it's supposed to be doing at. So that was a pretty good trade. That was an easy, 90 cent. You load up and then take advantage of those type of trades. So again, guys, hit the subscribe button, like, send to family, send to friends, send to people that you know that's trying to get into trading, and drop some comments. Definitely want to kind of get an idea of what you guys are thinking about and new material and just what I'm doing and how I'm trying to contribute to the community. So guys, if you have any questions, drop that stuff in the comments. And as I always tell all traders, new and old, stay studying and stay focused.